Hello and good evening everyone. Welcome to a new episode of Investing Fool. In today's video, we'll discuss about what happened in the market today. Obviously, we'll discuss about our portfolio. We'll take a look at the Nifty Top 10 portfolio as well. We'll discuss about the global factors that are at work and what we could expect in the next few days and weeks to come. So watch the video till the end. Anyway, we'll try to keep it short. But before that, there is one small assignment for you. So if you are a DIY momentum investor, or if you have been like investing in momentum ETFs or index investing, then please add a comment below the video on how much your portfolio was down by today, like the percentage number. You can write down like 2%, 3%, 6%, whatever it is for you, right? For me, it is like 4%, right? So please write down that number. So when we are like even if you want to like build and interact as a community, right? So when people express their own like losses, it kind of creates sort of an environment in which the pain kind of binds you together. So let's do this exercise and see how it pans out. So please write down how much your portfolio, and I'm talking only about the momentum portfolio. If you have like gold side mein hai ya debt mutual fund side mein hai, don't include that. Only how much your momentum portfolio was down by today, you can write it down. Of course, it is not the worst that we have faced. We have faced much worse during the elections as well. But let's do this exercise. Anyway, let's get started. And yeah, so the first thing that we'll discuss is VIX. So last we discussed VIX was during the general elections, because it had spiked to almost 26 at that point of time, still lower than previous elections, but it had spiked during that time. After that we had forgotten about VIX because कोई ऐसी uncertainty की बात नहीं थी, and the VIX was trending sideways, right? Today it went up by 40% and it closed above 20 after a long time, and this is because of multiple factors, global factors at play, which are so VIX or volatility index is a measure of how the market participants are anticipating the volatility of the market to be in the next like in the future, right? I think it's in the next 28 days. So the market is expecting volatility to increase further, and that is what is reflected by VIX. And when we take a look at the sectors and indices, everything was in red today. Our portfolio was down 4% in today's session. So let's just take like a few minutes, a couple of minutes look at the portfolio and some indices, and then we'll come back to this slide. Okay, so we are here in our core portfolio sheet. So as you can see, the portfolio one-day return is minus 4%. Our benchmark index, which is Nifty 500, one-day return is minus 3%. I've added this metric, which is the portfolio advanced decline ratio, or ADR, sort of an ADR for the portfolio, which basically is just a ratio of the number of shares whose prices advanced today by the number of shares whose prices declined today, right? So because like 100% of the shares were in decline today, so that's why the ADR for today is 0. And if we look at the all-time return, the absolute return, then they have been smashed. So we were trending like we were trending above 40% just a few weeks ago, right? And now we're down to 30%, and our alpha vis-a-vis the benchmark index has also reduced quite a bit. So this is what happens. This is the day that the market shows you from time to time. That's why they say hope for the best but prepare for the worst. You do not know what can happen. There are no guarantees in life, and definitely there are no guarantees in equity investing, right? And on top of that, momentum is a high beta strategy within equity, right? So we have to like keep all this in the back of our head when we are getting into something as momentum investing, just enticed by the returns it has given in the last few years, right? Times are not always going to be good. If we look at the one-day returns, you can see this entire column F, everything is in red. So we are led by Motherson, down minus 8.5%, oil down minus 5.5%, Oracle minus 5.2%, GRSE, Cochin Shipyard, both in lower circuit 5%. You can see basically everything is in down. Some of the least impacted are Cummins, minus 0.5%, then Zydus Life. Pharma as a sector itself is relatively a defensive sector and was hit less. So Zydus Life was down 1.5%, Bajaj Auto was down 1.7%. rest all like in the ballpark of 3.5% to 5%, right? Let's take a look at the sectors, sectoral indices. I've added a few more indices here as well, but let's focus on the sectoral indices for now. So you can see we are led by media, which is minus 4.5%, realty index hit by 4.3%, PSU bank down minus 4.1%, Nifty auto down 4%. So no one is spared, right? Everything is red, everyone is in a bloodbath, right? And if we look even at the 1 week change, right, there is no index which has actually gained over the last 1 week. So things are in the very short term, things are not looking as bullish as they used to look some sessions ago. And there are a lot of factors at play which we'll talk about. If we look at the broad-based indices by market cap, right? So Nifty 50 down 2.7%, Nifty Next 50 down 3.3%, Nifty 200, Nifty 500 both down 3%, Mid Cap 50 down 3.3%. Even gold was down 1.4%. I'm talking about the INR gold or gold Bs. So yeah, that's pretty much the flavor of the market. If we look at the Nifty top 10 portfolio, while the portfolio is still above Nifty because Nifty itself fell by like 2.5% today, so the portfolio still maintains the gap with Nifty. But if you look at the 1 day performance, right, so we are led by Tata Motors here down 7.4%, Power Grid down 4.3%. The rest like they are a little bit lower, of course, than the broader market stocks. But if you look at Sun Pharma, it is the least impacted, being from the pharma sector, which was also a little bit resilient in today's session. And so Sun Pharma was down 0.8% in today's trade. So now we come back to what led to this rout in global markets and in Indian markets. And of course, India has not been as worst hit as some of the Asian markets, and I hope that continues to be true. But we'll see how it pans out, right? So there are multiple factors at play here, and no one knows how these factors, how the interplay of these factors is going to play out in the next few days or weeks. Till how long the impact can be, how much the impact can be, no one like knows these things. Everyone is trying to like get their own estimate, right? So the first factor that was there was the weak US jobs data report which came out previous week, I think, and it sparked fears of a recession. Now, fears of a recession in the US economy is not something new. They had come in late 2022 as well. They had come in early 2023 as well. Ke recession aa gaya. Some had even started writing pieces that we are already in a recession and all that. But somehow then everyone forgot about it, as frequently happens in the market. And wo tal gaya, right? So now this week jobs report has again triggered like fears of US recession and everything, especially when like a lot of like interest rate cut cycles are already baked in to the market, right? Fed has already said कि September में rate cut कर देंगे. Now it's almost certain. अब तो मतलब उससे पहले भी हो सकता है, right? We do not know that, right? So markets had already discounted that. But still these recession fears have like fueled like hopes of maybe even sooner rate cut, right? Now this was one factor that was playing out at that time. Again, this Japanese yen carry trade impact started impacting markets worldwide, and this is kind of a problem that was in the making. So Japan was a low interest rate economy for quite some time, right? वहाँ पे 0% का interest rate रहता है, and naturally what will happen if someone gives you money at 0%? Obviously you will take it, right? You will take it and you will invest in some riskier assets elsewhere, and you will try to get the arbitrage there from that liquidity gush and that leverage, right? So what happens now is everything was okay till the Japanese inflation was also down. Like inflation and interest rates, they have to go in sync, right? You can't have you can't have too much of divergence between those. So as long as the inflation was down, the interest rate was down, everything was okay. People were borrowing money in Japanese yen, investing it elsewhere. All those things were going on. This was going on for like 3-4 years. And now when inflation has started inching up, right, that is not sustainable. So if inflation is at like 2% and your interest rate is at like 0.25%, then that is not sustainable in the long run, right? Who will pay that money? So So someone had to step in and do something, and that someone was obviously Bank of Japan, right? Bank of Japan aaya and they started increasing interest rates a bit. They have not even increased it a lot. They've increased it just a bit, and with that, all this unwinding is taking place. So those people who had like, and these could be institutions, these can be retailers, whatever, mostly institutions. But if they have taken like, if they're leveraged on Japanese yen, so they are having to unwind their existing positions in other markets also, and that is what is leading to this like huge selling pressure in all the markets. US markets started first, and when the US market sneezes, then the world catches a cold, right? So everyone will be impacted. Obviously, we are not an export driven economy like some of these Asian markets, like maybe Hong Kong, maybe South Korea. We may not be impacted as much, but then in market no one knows, right? My personal feeling is that it could like we could tide over this problem in the next like 3 weeks maybe. We do not know. I don't know if we will wait till September to get a lot of clarity. I don't know if the Fed will wait till September. So if we look at the rate cuts, if we discuss about the rate cuts, so the market was already expecting 25 to 50 bips rate cut in September, and like a total of like 125 bips by the end of this year, right? But because the way circumstances have played out, this can be a lot more quicker, right? That is obviously on the Fed, and they have been working in like in close association with other central banks, of course, in the developed countries. So as far as India is concerned, India की थोड़ी बात करते हैं. So the Indian market has been resilient for quite a long time, right? We have seen a very bullish trend. Agar Nifty 500, it was like the return was like 34%, 35% before that. It was not even 1 year, right? From the start of our portfolio in November last year, it has given like 35% returns. That is not normal rate of return, right? These good times do not last, so these are abnormal rate of returns, and the market will always look for some kind of a trigger to fall or to consolidate, to just go in a consolidation phase, right? And we have been very resilient. There is a lot of liquidity that is sitting on the sidelines, that is coming into the market. Election aa gaya, the verdict was not what we expected. The markets was okay. In March, you remember the SEBI froth and all those discussions had led to a short-term like correction. We digested it well. The liquidity kept flowing. Budget aa gaya. Budget mein bhi negative news tha. We still absorbed it. We again went to new all-time highs, right? But most of those factors and all of those factors were not global in nature. They were domestic. Right now there are global headwinds, and it's somewhere or the other this liquidity thing has to stop, right? Liquidity cannot keep like compensating for everything that is going wrong with the world, right? So there could be two ways in which Nifty can react from here. This could be a very short blip also, and we might as well recover, we do not know. Or this could be a short-term top. So we closed above 25,000 only on one day, and then we slid back, and we barely closed above 24,000 today. We could go even lower based on how the global markets react today, whether whether the Fed or the Bank of Japan is like rushing in to soften the impact or anything like that. So everything depends on that. But my feeling is that India will relatively see lesser impact, and like it could be over in a few weeks, right? Because remember, we are already talking about rate cuts. So rate cuts will further fuel flow of liquidity, right? These liquidity would have to flow to some emerging markets as well, right? I'm not saying it will specifically flow to India or anything, but this liquidity has to go somewhere, right? So that is already factored in. So some of these knee-jerk reactions might be elevated in a few weeks or maybe in a few months. We never know. If the Nifty goes for a long consolidation, that is also fine. It's actually those who have started with something like momentum investing recently, they should understand that these phases come when the market just does nothing for months. Right, so yeah, we should have that in the back of our mind always. We should be prepared for that. Yeah. As regarding the news, although no one cares about news on such a day, but two news on towards the portfolio stock. So Motherson, there was some news on Motherson acquiring a 34% stake in Motherson Auto Solutions Limited. And Motherson was the most impacted in today's trade as well. I'm not sure if there was anything else, but there is a Japanese connection to Motherson, of course. So those of you who know the company know that it was a JV earlier between the Sumitomo Industries, I think. So it was called Motherson Sumi. That's the name which we knew it by. And I'm not sure if the turmoil in Japan has anything to do with how Motherson has performed today. The second set of news was regarding Bharat Dynamics Limited. Again, the stock was down like 5.5%. So none of these positive news matters. It's just about sharing it with you, right? So most of these positives have anyway been factored in. So DRDO and BDL actually got the IAF nod for producing Astra missiles. These are the Mark 1 variant of the Astra missiles. These are air-to-air missiles that are fitted on the Su-30 MKIs and the LCA. And there is a Mark 2 also in development, but there is no news on the order yet. Yeah, so I don't have any idea about the valuation of the order, but these are anyway just missiles. These are not like big like equipment like fighter aircraft itself or something, right? Anyway, so what should we do now, right? So we will first monitor what happens in the market going forward. No one has any idea, no one has like a full idea of how this is going to play out, right? Everyone is in a like wait and watch mode. Markets can definitely bleed further. We should be prepared for that. We should definitely be prepared for that. As always, we have defined our strategy, and that is why we should be clear on what to do when things do not go our way, right? Even if the market tanks, like right now it's not even a major correction or anything, right? Even if the market tanks below its 200 DMA, what will we do? That is defined in the strategy, right? We'll stop buying any new stocks. We'll just continue holding whatever stocks we have. There would be no change in strategy. We will stick to it as it is. We'll stick through the thick and thin, and that's why I'm saying I'm just reminding you that please write down how much your momentum portfolio was down by in the comment box today, and that will create a nice feeling. जब जैसे बोलते हैं ना हमाम में सब नंगे, right? So every sector, every index, every portfolio, every investor was probably in red today, and that will sort of create a camaraderie in the community, right? So that was it for today, guys. If you like this video, please press the like button. If you haven't subscribed yet but watch our videos regularly, then please press the subscribe button. And that's it for today. I'll see you in the next video. Till then, have a good day and bye bye.